Okay, welcome back to the Mining Pod. On the heels of a big week for CleanSpark, we got Harry on the hot seat. Harry, how you doing?
Good, Will. Good to see you.
Good to see you too. We are here in the beautiful hills of Georgia. I'm a Civil War buff, so I've had a lot of fun this week just driving around. I rented a car, and I've been listening to James McPherson's Battle Cry Freedom driving around. Been really great. Meanwhile, on Twitter, we've had just chaos this week. So you guys had some big news we'll get to in a little bit. TeraWulf had a big deal that they signed and announced this morning with Google. I think the first Bitcoin miner to do a direct deal with a hyperscaler or basically around that.
That's a good question. I think that's correct.
I think so.
Yeah. There's probably some that maybe we don't know about or weren't disclosed, but I think from a modern AI HPC era, for our mining compadres, I think this is the first one.
I think it is. And then the Proto announcement, which we're all here for. Great job to the Proto team for rolling that out. We'll be doing a show with them in about an hour. So excited for that conversation.
Yeah, they've been incredible hosts. They put on a great event. Yeah. We're proud to mine extensively in the great state of Georgia. So it's great to see them bring some love to our backyard.
Yeah, the Lieutenant Governor, mixing in my Civil War here, showed up on stage. And okay, this is one kind of laughable moment about a politician. He was like, "Thank you to Proto for showing for what they're about to show with the tech," but the presentation had already happened. Did you notice that?
We can give some grace to our elected officials because they have lots of industries that they have to be expert in, and they can't always nail it.
I enjoyed that as a Bitcoin pleb who's libertarian. Anyways, they hosted and they showed up, and thank you to Proto for making all this possible. Let's dig into CleanSpark though. That's why we are here, and we'll start with the question everyone has. Zach departed this week, beginning of the week on Monday, announced his resignation after the quarterly filings went out, or the quarterly earnings. Tell me about that.
Yeah. I mean, look, I think that, any company goes through transition periods, and, the leader who gets you to where you are is not always the leader who takes you to the next step. In some cases they are. Yeah. I think that he obviously did a lot of good taking the business from the traditional energy space into Bitcoin mining. Yeah. And then scaling us to quite significant scale. Mm-hmm. 40, 50 exahash, under his leadership. And I think that, between him and the board, there was the mutual understanding that it was time to move, forward. And we're in a really fortunate position where Matt has been involved in the business since day zero, probably day negative something. Yeah. And so there was a really natural handoff point where he can take the wheel. And we're super, super fired up to keep going.
Yeah. So I think that's the question everyone has, apart from like maybe questions around Zach, and like seems like there's some family stuff in there in his statement, so we won't prod too much. But it seems like this is a good opportunity for maybe a strategic change at CleanSpark. You guys have been the pure play miner when all the other competitors and the peers out there that you guys are benchmarked against have, started talking with the neo clouds, not really hyperscalers until this week with TeraWulf. But at least the neo clouds and others, you guys have stayed persistent on the pure play model. We even talked about that at Bitcoin Park in January, about you guys pursuing that model. Do you see that changing?
I think that what you should expect from us is that we're going to remain relentlessly data driven on what the right path forward is at any given time. And so we've been taking a really hard look at ROI, a really hard look at risk adjusted revenue and profitability over time. And that led us historically to the conclusion to stay a pure play. But by no means is that math not getting run on an ongoing basis. Yeah. And so, we talked about this in the call, but I think it's worth highlighting, which is that we've got over a gigawatt under contract, which means it's available today. Yeah. We've got 1.2 in near-term pipeline. We've got 1.7 in mid to long-term pipeline. And so when you think about what do we do with all of that power, we're totally flexible and open to thinking through the best shareholder priority for each one of those megawatts on a development basis.
And with Matt, I mean, you have, and the management team, frankly, like you are like the newest member of the management team. You've been around for about a year. The management team's been there for a while. Matt's been there for a while. So you could make an argument both ways. And your earnings call, you guys did highlight that you guys have these assets. A few of the bank notes that were put out, or bank analyst notes that were put out after your earnings noted the Georgia facilities in particular look pretty good for AI HPC if you guys were to pursue that. With Matt's leadership, though, you could be like, oh, okay, like the pure play model was there while he was chairman. So I could see an argument for both sides, you guys saying one way or the other. And it's for the street to decipher which way you guys are going to play. But do you think we can expect any like further team changes or anything that would sort of highlight a move to one way or the other?
I think that what you can expect from us is that we've spent a lot of time and effort growing and cultivating a management team that's ready to tackle any challenge.
Yeah.
And it's just an honor to get to serve alongside them, frankly.
Yeah.
So I think that, the skill set that Gary brings to the table on the financial side, I wouldn't trade him with anyone in our industry or any other. Taylor, same deal on technology. Scott, same deal on operations and development.
Mm-hmm.
And with Matt in the big seat at this point, I think that what we're excited to do is be more deliberate about sharing our strategy with the market as time goes on. That day's not today, but we want to make sure that our clear strategic priorities and vision are super well communicated. We want to be in direct communication, with you, but with shareholders generally. We do a really good job, I think, of cultivating relationships with the institutional folks that are out there. We went and raised a $650 million convertible bond back in December. We talk to our bondholders very regularly, the same way we would talk to shareholders very regularly. We think of everybody across our capital stack as a really clear audience that needs to be communicated with on an ongoing basis, brought along with the strategic opportunities that are available to the business, what our current best and greatest thoughts look like.
Yeah.
And so, what I want your audience and you to know from us is that we want to be in direct communication. We want to be very clear about the strategic vision. I think that, something that we talk about internally that is worth highlighting is that we sit at the intersection of two incredible tailwinds.
Yeah.
One of them is Bitcoin. The other one is energy. And those are not limiting tailwinds. Those are really expansive tailwinds. What compute is doing in the market today is hugely transformational from a energy system perspective.
Yeah.
From, the LLM that you're going to type in your show notes into to make sure they sound good.
Purists over here, purists.
And then what Bitcoin is doing to innovate around financial freedom, around the ability to save and transact in a freer, more libertarian kind of way. All of these are the convergence of incredible tailwinds that are going to make us a more prosperous society.
Yeah. And
at CleanSpark, we're very, very invested in being a force for change, positivity, and shareholder value as all of those tailwinds hit our back.
Okay. With those great tailwinds comes great expectations, right?
Good.
So what's your thoughts on year to date and then past this, I'd say watershed moment for you guys with change in leadership for the first time in 5 years. Zach started in 2019 as
close to 6.
Yeah, 6 years. So, any thoughts on year to date performance of the company's growth? Obviously, you can't comment on stock price. You guys can't control that either. But operations wise, you guys have had really positive year in terms of cash flow. Like that's been kind of like the note in all the bank analyst thoughts is like, hey, cash flow has been really strong for you guys. But yeah, I'll leave it to you without adding more context.
I think that we're really focused on being fundamentally sound in everything that we do. Maybe that makes us not as exciting to say some of that, but at the end of the day, we're a bunch of nerds and entrepreneurs at the table together who know it's not what you make, it's what you keep.
Yep.
And so bringing those sound fundamentals to the table when we think about each exahash delivering more top line, but also more bottom line, delivering operating leverage as we achieve continued scale. And so I think that when we made the jump, so let's rewind the clock and do the historical timeline, right? You wake up and it's October 1st, 2024. We're sitting I think it was like 27 and change exahash, 27.4. You wake up today, we got 50 installed. And so that's a tremendous amount of growth. But with that growth comes operating leverage, where we're able to control the non-energy costs associated with the business as you go through that kind of growth period.
Yeah.
So being able to see that wedge between, top line and bottom line grow over time is really exciting for us. And we believe creates, I'm always sort of using train analogies, like
train guy, I get it.
That's the front of the locomotive, and it's able to pull a lot of weight behind it. And then you start to look at stuff like what we're doing on digital asset management, puts more coal into the train, makes it run faster, not the coal's where we're going.
Yeah, not an ESG narrative.
But that's how we think about it is like, how can we pull more weight? How can we make the whole thing hang together more efficiently?
Yeah.
And what opportunities does it open up for us as we have that very strong front train car pulling a lot behind it? Where else can we go? What else can we do? And really think carefully about not just like, how do we, and it's funny, I read a tweet. There's a really good marketing woman on Twitter named Lulu Chang Merservi. And she just tweeted before we started recording. She said, we need less people who talk about how to build boats, and we need to talk more about and I'm going to paraphrase, but the guttural call of the ocean to bring you out to sea to fight and find adventure, right? That's the
guttural. I like it.
That's the thing that we're thinking about is like, why do we believe that the future can be dramatically better than the past? Not for CleanSpark, but for the world. And how can we play a critical role in driving that forward?
Okay.
That's where our heads are at. And we think that when we look at the value we can deliver back to shareholders, the size of the vision is oftentimes a determinant for the size of the outcome.
Definitely. And so just to clarify your train analogy here, or metaphor, because not an English major, so I don't always know the difference. I had to sit down and think about it. Cash flow. Would you say that's kind of,
Exactly.
Okay.
Right. So we're able to provide a lot of optionality as we think about the future because we have such a strong, stable operating business.
Yes.
It gives us creative freedom to be able to think about the art of the possible. Yeah. Because the art of the present is well paid for.
You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
You have strong cash flow, and you guys have been noted for that all year. You guys have all these assets, 1 gigawatt under contract, pipeline. A lot of people have pipelines, but you do have pipeline. And then you have a team that can execute, management staff that's been around for a little bit. Another way of thinking about this, and not to put words in your mouth, but is use that cash flow for another business or another model. And we've seen people use that Bitcoin mining cash flow, I'll say, and turn it into other products with AI, HPC. And so I would just note that as something of interest. I think it seems like you guys, like many other teams, are not going to announce anything until you have it done. We've seen that with a lot of people. Only like 1 or 2 companies have kind of put out the information that they're going to dive into AI, HPC. And the one that comes to mind is Riot, and they had an activist investor on their ass. And so that's basically why they had to do it. So I guess maybe more like a mental bookmark for the audience. I'm not going to push too much more on that question. Feel free to jump in there. But
we love having a tremendous amount of optionality.
Yeah.
On our balance sheet, in our power pipeline, and in our capability set across the management team.
Okay.
That optionality is important to us. because it means that we get to be data driven around what we decide to do.
Okay. And cash is king. It lets you do that.
Bitcoin is king.
It's true. It's true. Well, when you have employees to feed, Tom Asiero, who we're all friends with,
says you can't eat your Bitcoin.
he does say that. He told me very early in starting Blockspace, he's like, cash solves a lot of problems. So I can see that being a focus for any business of any size. Okay, I want to keep going into CleanSpark's operations, though. And so let's dive into those questions. You guys have a higher cost energy portfolio than others out there, which has been a main reason a lot of people have been like hinting or pushing or whatever, cajoling for you guys to get into AI HPC, because they obviously get higher multiples on both your stock, which a lot of people want, and then also like the cost of compute or the purchase power of that compute is higher. So you guys get more money out of it. The two things that you guys have been doing to work around that, though, is unit efficiency. So you guys upgraded your fleet, got the joules per terahash down by 25%, I think, last year. And then you guys have signaled that you're looking at finding different power sites. I want to hear a little bit about both of those. And first one specifically, we should start with that. You guys have made some Canaan purchases this year. We're here at the Proto event. Where are you guys at with ASIC purchases?
Great question and deep, broad area.
Yes.
So two things to keep in mind. It's not just about the joules per terahash efficiency, but it's also the CapEx per terahash and the capital recovery period for it. So like, this isn't a secret. Canaan machines are not more efficient than Bitmain machines when you go generation apples to apples, but the cost structure is more constructive. And so you get to ROI even faster, even at a slightly lower efficiency. We think both units are super high performant from an uptime perspective, from a DOI perspective, from a quality of manufacturing component perspective. They both deliver great products. And so what we're looking at is managing our fleet against our power costs. So yes, on average, our power cost is higher than some peers. We think our marginal cost to mine still remains incredibly competitive.
And it is, if you look at the numbers.
Exactly. And there's a few reasons, behind that sit under there. One is that our portfolio is not one thing. We have 30 plus mining facilities, and there's a range of power costs across those. And so we really take a deep portfolio view. You can marry a lower efficiency machine to a lower cost piece of the portfolio. You can marry a lower joules per terahash to a higher power cost site and achieve a really healthy margin ROI period, payback period, as well as long-term performance. So it's really about the optimization of the entire portfolio. The other thing to keep in mind is that we, because of our fleet efficiency, run through periods of the year that we would have otherwise avoided if we had a 20 or 30 joules per terahash machine fleet. So we have the ability to decrease that power cost, but why would we leave a profitable hour on the table if it hurts our blended average cost, but those were still all profitable hours? We don't want to leave any of that cash on cash return on the table. And so there's some nuance into how we manage the portfolio and the power cost that kind of spits out at the other end. This is, from our perspective, a really critical piece. We are managing to profitability, not the vanity metric of the lowest possible KWH, because we'd be leaving profit on the table potentially if we were to do that. That's nuanced and
a lot of miners don't like to talk about profits, so it's like you
gotta have them. Then the other piece in all of that is, where do we go from here? We've got 10 exahash pretty well within hand, ready to go.
That was my next question, is like, what's the status of that? You guys have that on order, and then you'll have the power contract. It's already built out for the most part. This isn't greenfield, right?
So it's not one thing. It's going to be deployed across a blend of site expansion, site build, and then the partially underway facilities as well. So essentially, our roadway to go from 50 to 60, pretty well understood, pretty well within hand. We control our own destiny. That's something that we feel great about being able to do. But this is, back to the comment around, don't tell people about how to build the boat, tell people why they should go to sea. Why do we do Bitcoin mining? We do it because we think that participating in the consensus mechanism of the Bitcoin network is critically important.
Mhm.
We think that earning Bitcoin as a native revenue stream is something highly accretive when you talk about what we do with it once it's already on our balance sheet. And because we believe that we're still in the early days of what Bitcoin can mean to the world. And that doesn't mean it'll go up or go down on any predictable basis. But our view is that over the long run, Bitcoin is critical technology that the world needs. Money is just technology, right?
Yeah.
And so if you go back, 10,000 years, we were using yapstones, and we were using glass beads, and then we were using banknotes, and then we're using Bitcoin now. So the thought about the progression of technology and being a participant at the base layer of a monetary technology as it goes through its monetization event, that's a critical role to play in the global economy.
Yeah.
And we take that role very, very seriously. Then thinking about the pipeline. We are always the same way that we go through an evaluation process around what should we do with our megawatts.
Yeah.
The same type of rigor is brought to what should we do with which megawatts. And that means on a pipeline forward-looking basis. It also means on a development basis. So an easy choice that we face on a regular basis is should we build air or immersion?
Yeah.
That calculus has changed dramatically over the last 5 years for us. And so we're always thinking about what type of technical environment should be brought to a certain source of generation. And does that put us in a position to monetize that power over a very long period of time, be a positive contributor to that community, and create long-term lasting shareholder value out of that decision?
Yeah.
We make that decision at the business model level. We make that decision at the technology level, and then rinse, repeat, and continue to remeasure. So, these facilities are truly a portfolio that get reevaluated and thought through on an ongoing basis by the entire team. And that's a muscle that we've developed over time. We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
CleanSpark's using debt to grow, and people like it because it's not dilutive. And there's, we've had miners on the show in the last few weeks who have done a whole lot of damage to their capital basis by dilution, and they seem to love it still. And I don't think.
Who'd you have on?
I can't say anyone's name, but if you scroll through, you'll find it. You guys have big hodl, and you're going to use this also for a trading strategy. I'm assuming this whole thing is just to offset the cost of the debt, or what is like the purpose of matching a loan on your Bitcoin versus, and using like the trade at the same time?
There's a lot of considerations that go into the design, implementation, and execution of what we call a capital strategy.
Yeah.
And I think that you should have Gary and Rory on also, because I'll do the slightly poorer man's job version of this.
That'll do today for sure.
But ultimately, the purpose of the business is to use capital to create value. And how you marry sources of capital to uses of capital is really the job of a management team, and focused heavily on the CFO's organization to quantify that, risk manage that, and think through, what that should be. So, and let's use some examples in our own history. The collateralized line with Coinbase. That money is highly collateralized to the lender, right? We're over collateralized on an LTV basis. The coupon is competitive and strong. And what's great about it is that it's a highly flexible source of capital. So we get a big opportunity in machines. We get to pull it down quickly, deploy it quickly, and use our operating performance to go bring that balance back down on an aggressive basis. So, and the other great part about having Bitcoin on your balance sheet over a long period of time is that you take a dollarized loan against a Bitcoin denominated collateral package. When Bitcoin goes up and stays up, you get a piece of that collateral back.
Yeah.
And so you're able to unencumber a piece of that on a Bitcoin denominated basis because the lender is still well collateralized with fewer Bitcoin. And so that's a really nice, flexible tool so that we can be tactical and swift on accretive opportunities with that type of quantum of obligation. Take another look at another type of capital. We raised the convertible back in December. The purpose of that was to make sure that we were incredibly well capitalized as we headed to 50.
Mm-hmm.
It let us take a long-term view on infrastructure, invest in the power contracts and land required to then develop and bring into our mid-year guidance. We had that strong pipeline of power even then, and that was when we were pulling in pieces of the pipeline to hit 50. We'll then look to continue to pull pieces of the pipeline in to do more as time goes on. So that type of capital has a longer duration than the Coinbase line, for instance, and we're able to make long-term infrastructure bets with it.
Yeah.
Then you look back at a transaction that I'm very familiar with, which is the grid transaction.
Yeah.
That was a highly accretive transaction to the company, break into a new strategic market, be able to bring a power pipeline in as it relates to TVA. That deal was an equity deal.
Yeah.
And so it wasn't an ATM, but it was a stock deal that we did. And so you look at the duration of monetizing the asset with grid, very long term, very high upside, new strategic market. Equity made great sense for a deal like that.
Yeah.
You look at the convertible, we've got some midstream infrastructure that we want to make sure we have fully online as we head to 50. We hit 50. Marrying that type of duration capital to that objective made a lot of sense. Then you look at the tactical piece of Coinbase. That's for that super tactical, swift, opportunistic opportunity set that's available to the company. We bring that type of capital to bear on those types of opportunities. And so building out a capital stack in a mature way means that all of those levers and tools become available to the company at all times. And it's the job of the management team to marry those sources to the most highly accretive uses to bring shareholder value back to the shareholder base in those moments.
One last question for you, which dovetails nicely with this. You guys have signaled your willingness to continue selling Bitcoin every month to fund operations, which, I mean, I like that model. Makes sense. Mine Bitcoin for cheaper than the market, sell a little bit, keep it rolling. But we're in a weird time where treasury companies are hot. Buying Bitcoin is in vogue, and then leveraging your balance sheet because your capital market to buy more Bitcoin, keep the flywheel going. You know this. So where do you think do you think that there could be like some sort of gap between CleanSpark's like strategy there and then like what the market is rewarding? And would you guys ever consider changing that strategy given like the market right now is rewarding certain companies, not all of them. Some of them are not doing super well on like an MNAV basis, but for the most part, that strategy is out there.
In the short term, the market is a voting machine. In the long term, the market is a weighing machine. And so our job is to create the company that is most heavily aligned with the long-term goals, values, and expectations of shareholders. I lose sleep every night thinking about that. And I know the rest of the team does as well.
Yeah.
But we want to be on, when you build a big building, you want to build it on bedrock. You don't want to build it on sand. And so the priority for us is to have an operating business that is highly self-sufficient, high margin, highly performant, and highly reliable. And so being able to cover our own costs in order to achieve that is the reason that we feel that there's so much optionality and opportunity for us as we look to continue to monetize the pipeline. And it's long-term very healthy for us to be able to function that way as we look to bring the best opportunities to bear.
Awesome. Harry, thank you for joining the Mining Pod. Great to have you on again.
Thanks, Will. Good to see you, brother.